All right, jumping on here real quick. So this is something that I've talked about. If you check out our YouTube channel, we did a podcast with Nate about this. Is reverse mortgages. So what you're seeing right now is it's grown significantly. So you're seeing about a 20% growth in this. And what this kind of is, it's for homeowners over the age of 55. So not everybody right now wants to make a sale. Not everybody right now wants to sell their home because they're happy where they are. But if you're thinking of selling in the next 3 to 6 years, this is who this is for. Now I know you're seeing a huge thing here. Basically, what it means is you have a paid off house, let's say $1 million, and you want to pull out some equity. So, how it will work is you're going to be at a specific interest rate. So, I believe right down here around 6.4% interest rate, call it six for now. And how this is going to work is your interest rate is now going to go against your home. So, if you take out 100 grand at 6%, roughly speaking, it's about 6 grand a year. So, taking that at the end of a 5 year term, you're going to now owe $30,000 plus the 100,000. All this really does means you don't have to make any payments. You get 5 years of non-payment of that. Now, what this actually will do to you is it will extend you 5 years in your home. Let's say you're worth $1 million today. You think it's going to be worth maybe 1.110% in 5 years. If you're playing a hedge and gambling game, it can work. But again, it's a little risky play. Now, who do I think has the best opportunity with this scenario? This is going to be for people and parents who are going to be helping their kids buy a property. Why I say that is because you can lend them 100, 200 grand. They can go purchase that property. And within 5 years, depending what they're doing to that property, they may be able with a refinance to pay you back the interest charges, right? So they're covering your reverse mortgage, just the interest only payments. So if that's 5 years, like I just said, 30 grand, they pay it back to you. And then when you sell your home, you'll pay off that 100 grand, but it's a way to get your kids into home ownership. The second option is if you're buying an investment property. Now, maybe you're buying something for your kids where you can rent the upstairs offset with the basement. Well, that's going to be another way that if you're going to put the down payment down and front the money for them, that rental income can kind of offset the interest only payments. So it's another option for you to kind of offset a little bit there while still helping your kids get into the market. Because again, they can refinance, they can support the interest payments. Again, remember, if they're getting about 1500 downstairs, right, it's going to cover them there. And again, your third option here is you can do something where it's a deferred renovation. So let's just say you want to reno your home, you want to do everything like that. You can use that home equity line of credit to reno the home, bring it up to par, do what you want to do with the property, then sell it almost like a line of credit, but you just don't have to actually incur the interest only payments on it. It just allows you to not pay anything for 5 years. So keep that in mind. That's basically what it's saying. If you have more questions about it, just hit comment or reverse mortgage in the comments and we'll set up a chat and go from there.